Good morning, everyone. It's Marshall Gittler bringing you the morning comment for July 17th. Yesterday's trading was notable for two reasons: the size of the moves and the fact that they were so mixed. The dollar appreciated significantly against the euro, the New Zealand dollar, the Swiss franc, and the Swedish krona, while weakening a similar amount against the Canadian dollar, Norwegian krone, the yen, and the Australian dollar. It looks as if the correlation among currencies is lessening. Maybe the market's leaving behind the risk-on, risk-off paradigm, and instead currencies are moving more on idiosyncratic domestic factors. If so, that offers more opportunities for traders to analyze the market and invest based on their views on individual countries and currencies, rather than just an overall global view. The Bank of Canada's statement following its meeting yesterday showed a less optimistic view towards the global and Canadian economies and less urgency to tighten rates. The Canadian dollar initially weakened on the news, as I had expected, but then recovered and actually traded stronger after Bank of Canada Governor Poloz refrained from mentioning the currency during his press conference following the meeting. Nonetheless, I view this move as simply a short-term profit-taking after the recent spike in dollar CAD, and I expect the Canadian dollar to weaken further going forward. Yesterday's U.S. data was largely favorable for the U.S. Industrial production in June rose less than expected, but the National Association of Home Builders Housing Market Index was substantially higher than forecast. Meanwhile, the Beige Book, published ahead of the July 29th to 30th FOMC meeting, said that economic conditions and labor markets improved across the country, while price pressures were generally contained. The news is likely to reassure the FOMC that its core scenario of gradual recovery without inflationary pressures is coming to pass, and that they're on the right track towards normalization of policy. It should therefore generally be dollar positive. On the other hand, Fed Chair Janet Yellen's second day of testimony to Congress added little to what we already know about FOMC thinking. Today, we've got a relatively quiet day on the data front. The Eurozone's final CPI for June will most likely just confirm the initial estimate of plus 5% year on year. From the U.S., we get housing starts and building permits for June. Both figures are forecast to have increased, which should again be reassuring to the FOMC. They look closely at the housing market. Initial jobless claims for the weekend of July 12th are expected to have increased a little bit, but really not much of a change. While the Philly Fed business activity for July is anticipated to have declined. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.